Let's talk about Apple, stock symbol AAPL. They just delivered their earnings, and the stock is slipping after hours. What does that mean for Apple investors? We're going to dive into the chart. We're going to go through some technical analysis and look at what we can expect from it going forward. So let's go ahead and get started on that right now. So no matter which way you cut it, you look at this Apple chart, and this looks like nothing but pure distribution going from about June of last year all the way up until about March of this year. And so really a sideways chop represents distribution, oftentimes synonymous with topping patterns. And then we got the flush to the downside. And ever since then, we've been gradually working ourselves back up. We're up about like 25% off of the lows. It's been an incredible run. So now you have Apple going into its earnings. It's priced probably for perfection at this standpoint. And while it beats, it's kind of like a ho-hum type of earnings, and we sell off. So let's go ahead and look at some of the key resistance levels and support levels on this chart before we get too far into the actual earnings reaction. Right here, this is the major resistance level. This connects the lows from August, and it also connects the lows from March. We broke below it via a gap lower, and notice what we have never done. We haven't actually broken below this during regular trading hours. We've not really seen that clear break. So we had a gap below it, and then we had a run right back up to it. That was from April 14th, and then we sold off for about a week after that. And now we've run ourselves right back into this resistance, and we weren't able to break and close above that level. So this is a key level right now. Couple that with this 30-minute chart of Apple, and what you have here is a rising trend line that it is adhered to quite well. So now you have this rising trend line with higher highs and higher lows, and this is intraday, remind you, and it's getting sandwiched in between this resistance level above and the support level underneath that continues to rise and narrow that range for which it's able to trade in. Now, let's go back to the daily. We'll throw on some after hours action, and what do we have? We have a break. So it was unable to break above that level. So we're looking at a large gap lower to the downside, assuming they don't turn it around in the AM tomorrow. And what does that mean for the stock at this point? Well, what we can definitely say is that it still has lower lows and lower highs in place. So if we're just drawing these out, you have a lower low, a lower high, followed by another lower low and another lower high, marginal lower high. And then we have another extreme lower low, followed by what might be your next lower high. So we have this series of lower lows and lower highs. It's breaking below this rising trend line that we talked about on the intraday. And it sets up well for a much bigger pullback to this 200-day moving average. Actually, on the weekly, it's a 200-week moving average. Now, what's interesting about this 200-week moving average is that we've had some significant bounces off of this level. You go back to 2019 when we had that big sell-off in quarter four of 2018. It bottomed at the end of that year and into the beginning of 2019 and went on this like epic run, never retesting it again up until just recently here in the past month. But there's been multiple tests in the past at this level, but what we've not seen before is where it actually comes back and retests the 200-week moving average. So if it does that, are we looking at a potential place where Apple could actually crater and break below that? That would be a huge ordeal for the stock. Now, you go back to some of the bigger recessions that we've seen. That's like, for instance, let's go back to 2008. You can see where we got way detached from the 200-week moving average. And even during 2008, we barely creep below that 200-week moving average. So I would surmise that if we do see a break below this level, I'm not sure it's going to be a very steep break below this level. At least historically, it would suggest as much. So that would probably be where the best value for the stock is going forward. Now, another range that I want to point your attention to would be this range, and it's not a perfectly clean one, but it goes back to 2023, and you can see where price has had some reaction in this area, going all the way back to, like I said, 2023, tested it again in April of 2024, and then testing it again here just this past month. So it's a range more from like 168 all the way down to 163 that is going to be a difficult area for Apple to break through to the downside. So that would be a supply zone that I would expect would interest a lot of buyers on the stock. So wrapping this up, pretty significant move for Apple. We're still in a series of lower lows and lower highs. There's some support levels that are getting broken in the short term, and there's some resistance overhead that's going to weigh on the stock on any kind of bounce back attempt. So what you want to do is, and this is what I do usually with earnings, I wait a couple of days. I let it settle in, especially when it's a negative reaction to an earnings report. You want to see where does it settle in, because those sell-offs can take a few days to finally find a bottom to where it might be tradable or where it might be of good a good reward risk ratio or opportunity. So be patient with it. Give it a few days. Let the dust settle and then go from there. If you enjoyed this video, make sure to like and subscribe. And let me know down in the comments below, what do you think the roadmap for Apple is going forward? Do you think this is a stock that really can reinvigorate itself? It had a $100 billion buyback. That's huge, but it doesn't really seem like they're doing much besides buying back their stock right now and living off of the cash cows of the past. Let me know down in the comments below your thoughts. Thank you guys, and God bless.